there, folks, and welcome into today's video. Hope you guys are doing great out there as always. Look at this. It's a rare morning video. I don't make a lot of morning videos. Look at my hair is even like not up. That's how early this morning video is. But we got a lot to discuss in today's video. A lot of different subjects that I want to get into. Yeah, the market's back red. It's Red Dead Redemption out there again. Russell 2000 down 1.56%, and then VIX spiking up. If you look at Pfizer stock, PFE, that is kind of like I've been looking at Pfizer recently, and here's a stock I hold in my dividend account, and if you just watch Pfizer stock, literally it moves inverse to the market. So if the Russell 2000 goes up big, Pfizer usually goes down, and if the Russell's down huge, Pfizer's up. There's just been kind of a stock that's doing the opposite of whatever the market's doing. Like Pfizer's having a great day. It's like the best stock I hold today by a mile, okay? So I want to get into a few different subjects that we're going to discuss in this video, and kind of explain some things that I think are really, really important to talk about and explain why certain things are certain ways and things like that. Make sure you guys hit that subscribe button. If you're not already subscribed to this channel, hit that subscribe button. And if you want to hit the notification bell to be notified every time I drop a video on this channel, you can go ahead and do that as well. Also, 7-day free trial for my private stock group. If you ever want to try out my private stock group, check out pinned comment down there. We got a free 7-day trial going on right now. Okay, so first thing we've got to discuss in this video here today is around my P&L so far this year, and some folks that were had some, let's just call it gripes with it, okay, and kind of what they saw here, right? So this is my P&L for the year, and this is where it's likely going to finish out at. I'm not planning on taking any losses moving forward. For the last we only got two and a half weeks left in the year. I'm not planning on taking any more gains this year. So this will likely be where I finish out at for the year, okay? And definitely had some folks that are looking at this, and I think it's a fair question. They're saying, wait a minute, you're supposed to be this long-term investor. Well, look at all these short-term gains, $214,000 in short-term gains, right? A lot of folks look at that and they're like, dude, that's like if somebody has a great job, they make $214,000 a year, right? And you have that much in gains this year, like isn't that a lot for somebody that's supposed to be a long-term investor, right? And so, first off, I think that's a fair question, and I want to address that, okay? And I think this is very important to keep in mind, right? So, in regards to me and kind of my views, right, is I'll invest in many different stocks throughout a year, right? Many different stocks. And sometimes I'll buy into a stock, and right after I buy into it, the stock shoots up like crazy. Now, that hasn't been the situation lately, obviously, with everything Russell 2000 just sinking, right? But if we go back, especially early in the year, it was hard to even build a lot of these positions. You'd buy a stock and it would just go up right away, right? And so my kind of view on this particular subject is if a stock spikes up a ton and I didn't really get my position built that I wanted to get built, I'll go ahead and cash that stock, right? But the main other part is I got to have my money in the best stocks possible, right? So let's say I have two stocks here, okay? I buy into stock A, which I like for the long term, and I buy it at $10 a share and it goes up to $15 a share. It gives me a 50% rise, right? And then I got stock B over here, which I love for the long term, and I buy that at $10 a share and it goes down to $7 a share, right? Well, first off, I didn't even like this stock nearly as much as this stock that's down big, right? Why not go ahead and take my profit here and move that money into stock B that I love? Remember, I liked this one more to begin with. This one I only liked and it went up a ton. Let me go ahead and flush that money into this stock, right? Now, that is more of a fundamental decision of me making a fundamental decision around a company, right? If a trader was to look at that, they would look at that very differently. They would look at that as like, hey, cut the loser stock and buy the winner stock. That's not my personal kind of way of looking at it, but a lot of traders would go ahead and do that, right? I'm trying to say, I bought a McDonald's franchise over here and I bought another McDonald's franchise. This one, appreciated some crazy amount. This one didn't appreciate nearly as much, but maybe it's just, this one's run just as well, right? And just has just as many sales. Why not go ahead and sell out of this franchise and put that money in this franchise, right? And so that's kind of the way I think about it in the stock market. The stock market can be very irrational in the short term. Very irrational. It can make some stocks extremely overvalued. It can make some stocks extremely undervalued, okay? And so this is very, very important to remember. And I'm just there to take what the market gives me. And if it's going to super overvalue stocks, then that's going to make me be a certain way. And if it's going to super undervalue stocks, that's going to make me be a certain way, right? And so that's the first part I just kind of want to address there around like, a lot of short-term gains. No, I'm not a short-term trader, but gosh, if I feel like there's money that can be way better spent in another stock, and I got a huge profit on a stock in a very quick amount of time, I'll take that profit and I'll move that into another stock I like more for the long term, okay? And so this is something to remember. Also, I have seven figures in long-term gains I could have taken this year, right? I'm not going to take those gains just to take those gains just so it makes it look like way better, right? So I have seven figures in long-term gains in 214K just so the number's dwarfed, right? I'm not going to make a decision like that. Like that would be a very short-sighted decision at the end of the day just to make me look good or something like that, right? So a lot of those stocks I love for the long term. So that is covering this, but I think it's a very, very important subject to cover because like I said, I know some people in my private stock group raised this question. Some folks in the comment section raised this question. I think it's worth addressing, just flat out, okay? So that covers that there. Next thing we got to talk about here, okay? This was a really fair question somebody in my private stock group posted, okay? They said, do you feel like your investing strategy has changed the past year? Going from solid fundamental plays to highly speculative, risky stocks like STC, Voyager, Avant, Coin. A lot of these companies I feel wouldn't be good stock picks based upon, obviously all the course curriculum, the hundreds of videos I teach in there and whatnot. So, I think it's a pressing question, but I think it's an important question. I think it's a fair question, right? Because not all the stocks I invest in necessarily always have the most amazing fundamentals, right? If I was only buying companies that had the most amazing fundamentals, I would be buying stocks like just Apple and Google and Facebook and Amazon and the big tech like everybody else has bought the past year, right? I'm usually trying to outperform the market, and sometimes you go the other way, right? If some of these stocks don't work out, at least in the short term, right? But I'm going for outlier stocks I think are going to be huge turns, right? And if I look at the valuation of Apple and Google and some of the other big dogs, it just is not compelling to me. Not to say those are bad stocks, it's just not compelling to me, right? But I think this is kind of a fair question. So, here's how I responded. I said, I think I'm always learning and adapting. I think that's the most important thing, of everything. Like I'm still learning, I'm still adapting. My investment philosophy is always kind of changing. But I broke it down like this. I said, my biggest positions by far are WBA, CRSR, Corsair Gaming, TDCF, Tesla, Honest, Planet 13. I don't really view any of those as super high risk in 2022 and moving forward in future years. Any other stocks I'm investing in, right, are small time. Probably 65 to 75% of my money is in those 6 core stocks, all right? And I think those 6 stocks are hard to point at and say those are bad companies or those aren't solid picks or something like that. Like Tattoo Chef has amazing growth, has a ridiculously amazing balance sheet, and has a disgusting opportunity from themselves. Corsair Gaming is trading at like a forward P of 15 or whatever, and is a huge cash cow business that's in 2 industries that are only going to get bigger. Gaming hardware and streaming hardware is only going to be bigger in 5 years from now than it is today, right? WBA has always been an extremely low forward P, and it's a needs-based business model. Tesla, do I even have to talk about Tesla? It's just an amazing beast of a company, right? That's just on the forefront of so many industries. Honest is honestly, I feel like one of the safest stocks to possibly buy at $7 and change, right? I mean, this is a company that makes diapers, baby wipes, cleaning products. Come on, it's a steal deal. And the Planet now, especially with its valuation being so dang low, I mean, we're talking about a cannabis player that's got growth through the roof, and it has a ridiculously amazing balance sheet, right? It has tons of cash around. So if I look at where the far majority of my money is invested, right? It is invested in companies that I don't feel are much of a risk at all in 2022 or moving forward, right? Every single stock in the stock market always comes with risk. Even if you buy a big tech stock, they're always ripe for disruption in the future, right? And some smaller company coming up with a new business model that's going to take them out, right? We've seen it throughout time, throughout human history, throughout the stock market's history that big dogs are taken down, right? It just consistently happens, and the new group will end up being taken down someday. It's just a matter of when it will be taken down, right? And so at the end of the day, all stocks in the stock market have risk. I view these stocks that I have as my core positions as very, very low risk. So in any other stocks I'll be in, right, any other smaller market caps or kind of, seen as riskier plays, those are only going to make up 25 to maybe max 35% of my portfolio in total. And remember, there's some stocks in there that aren't even risky. So like, for instance, a Revolve stock, right? Like I own RVLV, can you really call that a risky stock? Skyworks Solutions, SWKS, can you really call that a risky stock? You can't even call that. So I would say 10%, if not less than 10% of my actual money, my stock market money, is in what we would call risky stocks, okay? And so it may come across because I do videos about these certain stocks or whatever, but at the end of the day, like, where's the real money? Like, where's my big money at? And my big money is in stocks that I feel like are extremely de-risked in 2022 and moving forward in future years. And I think they all have, obviously ridiculous upside as well, especially, kind of with, more honest Planet and Tattooed Chef and Coursera than the others. But at the end of the day, they all have huge upside. And that's where the majority of my money is. And even if I look at stocks like Skyworks Solutions, which is a six-figure position for me, Revolve is a six-figure position for me, Facebook, FB is a six-figure position for me. Even if I look at companies like that, I'm like, where's the risk at with those stocks, right? And so that's kind of my view on that, but I thought it was a really, really fair question because I always like to know like how I'm being viewed out in the market versus what's reality, right? There's perception and then there's reality. And, even in regards to my year I've had, this is the best year I've ever had with, how much money I've made from the stock market. Like, the perception would be this has been a horrible year for me, right? Because I've been talking about Tattooed Chef and Coursera for the last several months, and I've been plowing money into Tattooed Chef and Coursera gaming. So it gives this illusion like it's been a bad year for me. This is actually my best year I've ever had in the stock market. I've never had a year where I'm going to cash out with $463,000 worth of gains, right? So that's kind of some food for thought there, guys. I hope you appreciate a video like this, just, full transparency and things like that. So yeah, much love as always. Don't forget to hit that subscribe button if you want to try a free 7-day trial of my private stock group. Check out pinned comment. Much love as always. Have a great day. Peace.